Thank you for joining us this afternoon to discuss an update in terms of HMRC's activity surge, what they're looking at, who's next. This is presented by colleague Imad and myself on behalf of Churchill Tax Advisors. Going to introduce you to each of us in turn.
Looking at the niche he's trying to call me. Can you just tell him, here we go? I think I should have that number.
Just to introduce you to myself, my name is Mike Walden. I worked at HMRC for 7 years, dealing with inquiries there of all scales, and then since then have been on the other side of it, assisting with inquiries, disclosures, and all types of HMRC tax cases. Imad?
Yes. Hello, everyone. Imad Ilyas here, Head of Investigations at Churchill Tax. I've been in this for quite a while. All types of interesting inquiries, from a simple compliance check to ADRs, tribunals, COP 8, COP 9, people showing up at your door to say that HMRC have seized over £500,000 in cash, etc. So all the fun stuff.
Yeah.
Or to you, Mike.
Yeah. We're part of Churchill Tax Advisors, who actually cover a broad gambit of things, although today we're going to be focusing on tax investigations, disclosure, ADR, and tribunal representation, all those things that Imad just mentioned. Equally, if you've got clients who need support on anything else in the tax or accountancy space, then feel free to get in touch. So today's webinar, we'll be talking through various things. We'll start with a couple of myths, things that for some reason clients still seem to believe, and we invariably have conversations with people who aren't aware of these things. Then we're going to talk about why it's important that we consider this now, what HMRC's current focus is, what investigations look like and how they start, what the process is throughout, some key areas for consideration on the penalties side, and then we'll open up to some Q&A if anyone's got anything either raised by what we've gone through today or anything further. So these are the myths that it's hard to believe, but some clients will still approach you with these views. The first and probably most prolific is that crypto is invisible, untrackable, that HMRC isn't aware of anything in that space. Believe me, that is certainly not the case. We've got numerous clients who have thought that right up until the moment that HMRC gets in touch to ask them about all their crypto trading and highlighting the fact that there is significant underdeclared income and gains. Cases in the crypto space are becoming more common. HMRC are building their expertise in that area, but they do routinely get exchanges of information from the major crypto exchanges. So whilst some elements of crypto, if you've got an offline wallet, sure, HMRC might not know quite what you've got in there, but obviously with the blockchain being what it is, it's actually possible to track through the transactions and see where they've gone. So it's not the case that crypto is some hidden solution to everything. Next one would be that non-residents can't be investigated. Again, that's certainly not true. HMRC routinely look into non-residents, and those can be some of the more complicated inquiries, looking at residents, looking at domicile, looking at UK source income, double taxation treaties. It gets fairly deep, fairly fast, and will include a lot more specialists than other inquiries. But non-residents do certainly get inquiries and penalties.
Mike, I think it's important to mention why, because of the very strong and I believe ever increasing cooperation with the tax authorities across the world.
Yeah.
In exchanging information. I mean, we have seen some very strange things that, we would even sometimes we get surprised. Oh, I didn't think HMRC would get that far,
Yeah.
but they are really, and I think now they are incorporating AI into, just like everyone else, they're incorporating AI into every bit of their outreach.
Yeah.
So yeah, carry on, Mike.
Oh, that's fine. I think this actually links to the point above in terms of crypto isn't invisible, neither is offshore, and really there is. I had previously thought there were countries where HMRC just wouldn't get anything. After the last couple of years, I'm beginning to doubt that because HMRC has been able to pull information from all sorts of places that we thought were not to be dug up. The next one would be that nudge letters aren't serious. So nudge letters, for clarity, are letters that HMRC send, often part of wide-scale campaigns, that broadly say, at the moment, there's a focus on, say, let property. They say, we know that you've got more than one property. We can't see rental income being declared. Could you tell us about this? Could you make sure that everything's up to date? There's offshore income and gains, same sort of letter. HMRC's got some kind of information that leads them to suspect that your return is wrong. They give you the opportunity to put it right. And if you don't, things will escalate. Now, that escalation process can be quite slow. It goes through a whole load of teams. But to be clear, there is a standard escalation process. So if you do not respond to a nudge letter, they will follow up and they will have details of every time they've tried to get in touch. So you will be slowly increasing up the penalty rates of anything that does turn out to be wrong.
And sometimes, Mike, it's not slowly. Sometimes it can be quite rapid. I mean,
Well,
we have seen, I was in an ADR recently, and where as with any ADR and asking the clients the question, where did it all start? And he said, I had a nudge letter, and we just didn't pay attention to it. Because at that point, it's the other side of that is if you do pay attention to the nudge letter, you are doing yourself a favor because at that point, it's much easier to resolve. It's not, and if it's part of these disclosure campaigns, it's not an actual caseworker assigned to it. It goes to a team. Still gets checked. It still gets robustly checked because we have seen cases gone wrong there and then they've come to us, but still much, much better than having to spend loads of money and a lot of stress
yeah,
much down the line.
yeah. Similarly, on this particular myth, the other side of it that I've seen is that if people for some reason seem to think that if you write to HMRC and tell them nothing's wrong, that will be an end of it. If nothing is wrong, fine. But just like before, if there is a standard escalation, there is a review process. That case team that Imad just mentioned, they'll take a look at it, cross-reference against the information that they have, because again, they do have information, and then they'll start to investigate if there's anything that doesn't match up. So writing to them, telling them there's nothing wrong, where that's not true, will lead to things escalating, higher penalties, more significant consequences. The last point on here is where people think that small errors don't matter, that HMRC aren't interested in small amounts, they just go after the big bucks. I'm here to tell you that's not true. HMRC talk about that everything in their guidance is paying the right amount of tax at the right time. So husband and wife, where they declare the income in one of them rather than both of them, HMRC do care. They will take the time to unpick and get that right. We can have cases that they've been dragging on years, and the conclusion is that £20 of tax is due. So HMRC don't focus on the commercial aspect or the financial amount. They look at whether it is technically correct or incorrect for the most part. Okay. As I said, we wanted to put this out and have this conversation sooner rather than later because HMRC are just ramping up. That is the way of the things at the moment. Inquiry activity increased throughout 24 and 25. They got new powers in the budget. Some of the penalties are higher, and there is a stricter adherence to the published guidance. As we said, the amount of information that they get from non-UK, both companies and countries, is off the charts. And they are, as Imad mentioned, using more and more AI tools and behavioral psychology to target more people with less resource. So that's more nudge letters and more targeted campaigns, more targeted letters, and getting to the point a bit quicker. So all of this leads to more inquiries, more trouble for clients. What we saw across 2025, and to be clear, we expect it's going to continue through this year, was a real focus on non-UK income. So through the Common Reporting Standards and other alerts, the likes of non-UK banks identifying the amount of interest paid to account holders, and those details are passed to HMRC for nudge letters and occasionally full compliance inquiries. UK property income, there's an enormous amount of landlords who don't pay tax or haven't paid tax. And we continue to have calls from people where it's 15, 20 years ago they've had this property and it needs to be put right. HMRC has written to them. Similarly, they are actually targeting people who've only had a property 1 year. And I'm not actually 100% sure how they determine which landlord to write to when. But there is a process, and they send thousands of these letters a year. UK property income is a target. Crypto, decentralized finance, and digital trading activity. Again, it's new. It doesn't really seem it, but it's a new area of focus for HMRC, and they're finding a lot of success. They've got some highly qualified specialists with real in-depth knowledge of crypto coins, exchanges, wallets, processes, and the tax implications of those. And they are willing to push those cases hard to get a track record and case precedent. So again, if there is a client, anytime we have a new client and we identify that something might be wrong, we mention crypto because it seems to be a blind spot for people that they haven't considered, or they think that HMRC won't be aware. As always with HMRC, small, medium businesses, entrepreneurs is always going to be an area of focus. It's one of the larger teams, what they refer to as individuals and small business compliance. That will always be the case because where a business doesn't have the funds to do things correctly, there will be errors. So, these are your standard cases where there's questions about dividend payment, wage payments, extractions from the business in any form, whether that's expenses claimed incorrectly or directors' loan accounts not being treated correctly, and everything. Those will often cross over with VAT, and more recently we've seen a lot more crossover with what HMRC refers to as employer duties, so pay as you earn and employment status. And the last one, which I think we've seen a big increase, is small inquiries in relation to CIS, where HMRC can see that there are payments to subcontractors on accounts, but there is no CIS paid or the amounts don't match. And then a massive uplift in what they refer to as supply chain inquiries. These are all-encompassing inquiries looking at every single supplier in a chain. They are being vociferous in chasing people, issuing what they refer to as tax loss letters, and seeking to disrupt supply chains where there is anyone in there who has done VAT wrong for one reason or another. And it has a big knock on. I had a client who lost a £12 million contract because one of his suppliers, some way down the line, had not paid the VAT. HMRC sent tax loss letters to everyone in the supply chain, and his client said, "You know what? We can't take the risk," and pulled out of a contract, and that is an enormous knock on.
Yeah, I think out of all of the focus areas, this tends to be the supply chain risk because it then grows into something much, much bigger and turns into a fraud investigation and really serious ones.
Yeah,
But just don't let go and it just keeps. So they could start with one inquiry and then it turns into multiple inquiries.
yeah. And they drag on. They'll put people on monitoring for 12, 18 months, look at all the records every month, and
Mm.
expect regular meeting attendance and really hold those companies to a high standard. We've seen focus on the care sector and the security industry. They're probably the main ones, but it is broader than that. Security and hospitality is obviously a very broad sector in the UK, and that is something that HMRC is keen. Their motivation is about shortening supply chains, so stopping subcontracting or minimizing it. But the impact on businesses is huge. So, given that, and now that we're in 2026, what we would expect to see, as always, is lots more disclosure type work, nudge letters from HMRC in all the standard categories. Again, crypto, non-UK income and gains, and let property. I'm not aware of any new nudge campaigns this year in terms of a completely separate risk area, but those things will continue. We're seeing some aspect inquiries where HMRC go in to look at one particular issue. When they do this, sometimes they will ignore everything else to the detriment of the inquiry, but really they should be open to considering it if they see anything and broadening the position. Full inquiries as before, looking at the entire return, every single transaction, occasionally asking about other years at the outset, which you really need to make sure you're pushing back on. As we just mentioned, VAT, pay as you earn, and CIS compliance checks, these often come hand in hand. They look broadly similar. They're kind of almost niche areas within HMRC, but they're working closely together. And so often when you see one, you'll often see quite rapidly approaches from those other teams. And then the one that we always want to keep a headline on is Code of Practice 9, suspected or admitted deliberate tax fraud. Anytime those cases come up, you need to make sure that you're having a conversation with a specialist immediately, because you've got strict timelines, strict things to adhere to. Everything that is said throughout the course of those investigations is critical, and there is a process to follow. So if there's any suspicion that you have a client who should make use of it, or you've got someone who HMRC has approached on that basis, I would certainly recommend a conversation sooner rather than later. A question that you'll always have at the start of an inquiry from your clients, from anyone you speak to, is how and why are HMRC targeting me? What is the cause of this? If you were to ask HMRC, I had one the other day, and not that I explicitly asked them, but they're always keen to tell you that they do random inquiries. I'll be honest, random inquiries don't form a large part of the basis of their inquiries because they have quite so much information. So often it'll be some minor trigger from either a discrepancy on the tax return, a change from year to year can be a significant one, and then discrepancies between data that they've got from banks, letting agents, sales platforms, PayPal, Airbnb, whatever it happens to be. Crypto exchange, as we've already talked about. The obvious one that will always be a risk for HMRC and will always be easy cases for them to pick up is where they see people who have a mortgage, have a house, but are declaring £5,000, £10,000 of income a year. That's
Yeah,
always going to be an obvious red flag.
yeah.
If tax returns are going in late, if there are estimates in there routinely, these things are noticed. And then the last one is third-party intelligence, which is similar to that first point about data mismatches, but can go wider, suspicious activity reports.
One
Or
other point, Mike, that I wanted to add, sorry.
yeah,
There is, and again, HMRC are putting their own system called Connect to very good use,
yeah,
which is connected, as the name suggests, is connected to almost everything about you or any company for that matter. And now with AI being embedded into it, it's even social media is included, right? So let's say if you declare income of 10,000 and then you've got pictures of very nice holidays, very expensive cars. Sometimes people share it's strange. In our line of work, we've heard strange things, someone showing big wads of cash on their WhatsApp status. For what reason, I don't understand, but these are things that somehow get picked up.
I've got a case where HMRC's looked at a client's LinkedIn profile and identified items on there as part of their questions. And I remember years ago working a case where HMRC had looked at the Google satellite images and identified a pool in a client's backyard. So, it really is.
Yeah, we had a case where the client said that, we don't have Just Eat, for example. And then HMRC said, well, here's a Google satellite image showing a Just Eat sticker. And they showed it. I was like, not satellite image, but I think it was just on Google.
Street View.
Yeah, yeah, yeah. So they have a lot of resources at their hands.
Yeah. The process hasn't actually changed that much over time for a lot of HMRC investigations. They'll always start with an opening letter, albeit we are seeing some opening letters which don't meet the legal standard. So it's always worth keeping an eye out for that, especially if there's any question on the timeline. That will come with a detailed information request, a nice long schedule of basically every item that's shown on a tax return they want to have some piece of evidence or some explanation for. Their preferred method is digital, and if given the option, they would always push for you or your client to make sure everything is scanned and digital and in their preferred format. Now, to be clear, they can ask for that, but there are certain things that you don't have to comply with. So be wary about incurring costs on behalf of a client or having your client incur costs to do something which they don't need to do. Bank statements, details of transactions, whether through the bank statements or transactions within the business in the ledgers. They often like to have meetings. They'll push for meetings, and whether phone, Teams, and face to face. And I've seen a tendency to push for that at the outset. And I've certainly had clients caught out where they want to cooperate, they want to comply, they ensure that they get in touch with HMRC and have that first meeting, but they do that before seeking advice, and they can get themselves into hot water from the outset. The one that stands out to me every time I see this is a client who received a letter from HMRC. It referenced rental income. They weren't aware that their property was technically generating rental income for tax purposes. So they did some research, reached a conclusion, immediately called HMRC to talk it through, and said, I understand that obviously this does need to be taxed, and HMRC have taken that as admission of deliberate behaviour because he told them that he knows that rental income is taxed, but had chosen not to declare it. That just the timing of that and the wording of that was so avoidable had you got advice at the right time.
I think just a few points on this. The approach, it's good that HMRC are going in this direction because our approach, whenever we get involved in a case, I've often seen people doing tennis or table tennis with HMRC in terms of letters. So you
Yeah.
send a letter, I send a letter. You send a letter, I send a letter. What we try and do from the onset is to pick up the phone and really judge because we sit in ADRs, we sit in long, intense meetings, and we have that experience. So I we just like to test who we're dealing with, and also the other point is to give it a more human touch, and then it saves a lot of time and costs as well, right? So it makes more sense.
Yeah.
Carry on, Mike.
Yep. So, as before, when an inquiry reaches a conclusion, you will always be looking at tax, interest, and behavior driven penalties. Again, routinely, clients want to reach an agreement that doesn't include interest. There is a process for negating interest, but it is rare. Um, and you can either reach an agreement with HMRC, which could include time to pay if relevant, and can include significant penalty mitigation. And if you can't agree those things, then HMRC will formally close it, leaving you to potentially discuss with debt management around payment terms if that's required. So, as I said, as before, all settlements, you're looking at tax, interest, and penalties. Um, penalties in any case, penalties need to be considered in any case where it is accepted that tax is due because of some kind of error. Um, but on the penalty side of things, which we will get into more, as we said, there is mitigation. The behaviors is key in terms of minimizing that penalty, which really means right from the outset, before anything is found to be wrong, you do your own assessment with the client, you walk it through and find out whether something is wrong, and then ensure that when you do, you present it in the best possible light, because at the end of the day, there will be penalties, which are tougher than ever. Careless, the rates in general are somewhat unchanged. Careless penalties up to 30%, deliberate up to 70%, deliberate and concealed if there's any fraudulent records or any steps taken to conceal it are up to 100%. And offshore penalties, particularly failure to correct penalties, are up to 200%. But even after the end of failure to correct penalties, there is a weighting based on territories that again can lead penalties up to 200%.
I think Mike, one very on this, especially with penalties, I'm sure you will say the same thing. What I've seen is these days HMRC have a default position that anything that's wrong is just deliberate, right? And this is where, with the earlier slide, in terms of getting a human touch, speaking to them, and building cooperation, building a level of uh, connection with HMRC inspector that's working on the case in a professional way, it really helps because otherwise, even then, they sometimes try and put in a deliberate. Uh, one of the main reasons I think is because let's say if it's a company inquiry and especially those VAT supply risk inquiry type of things, they know that they can't get much from the actual company because most of the time those companies end up not having the assets to the tune of the liability. So what the deliberate does is it ensures that they can go after personally after the directors of the company. So it's really important to not just cooperate, but then at the same time have the right representation. Because for I know that HMRC levy deliberate just like that, but there is significant burden of proof on them
Hmm.
to do that. And it's just knowing those right precedent cases, knowing the right law, etc., really helps because you can really put them on the spot and sometimes A lot of the times for us, actually, it does result, lands us in very good results.
Yeah. And you rightly mentioned personal liability notice, joint liability notices. We're seeing more from HMRC in terms of willingness to pursue directors and individuals responsible or who they feel are responsible, which can put the onus at a very late stage on an individual to deal with liabilities which up until then they had no awareness there was even a risk that that could happen. The ones to be aware of in terms of those things, primarily, it's always going to be VAT, but also pay as you earn and NICs. Yeah, as we said, quality of disclosure affects penalty reduction. What this means is from the point that an inquiry is started or a nudge is received, how you cooperate and what that looks like, how much delay there is, and how cooperative you are in terms of providing the information and the calculations to HMRC will have a significant impact on the penalty that can be achieved. Where we've got on here what the rates are up to, careless is 0 to 30. So if you are unprompted, no one tells you to go to HMRC, but you choose to do it anyway, you could potentially be looking at a 0% penalty in the right circumstances. So that 0 to 30 is what we mean by the reduction. So I think that concludes the look at what HMRC is doing and why, and what we expect to see. But we just want to take this opportunity to let you know what we do and how we do it, because we cover a broad range of areas. So those first few investigations, disclosures, I mean, we've highlighted a few specific types, COP8, COP9, WDF, and similarly with HMRC visits. But really, anything from HMRC that you're unsure about that looks like an inquiry or is asking questions, feel free to get in touch and we can have a conversation. Representation through ADR, which is alternate dispute resolution, effectively a form of mediation, and or first tier tribunal. And then taking it out of the realms of the things that I would normally do, we've got international and offshore planning, both looking at residency and domicile, moving companies occasionally, inheritance tax, along with trust and estate planning, corporation tax, and restructuring, demergers, clearances, as well as capital gains tax and planning for that. These are all things that we would be happy to assist with.
Yeah, just on this, there is a team behind us that looks after the tax investigations, and I might eat that, but we also have a team of chartered tax advisors and chartered accountants that look after essentially what I would class as tax advice, tax planning. So from inheritance tax, where you have a client, they're looking to mitigate inheritance tax. They have a number of properties or other assets, and they are to reached an age where they need to pass it on to their next generation. General estate planning, that sort of thing, and again, corporate restructuring, demergers, clearances. And I haven't come across anything that our introducers or clients have thrown our way in terms of tax investigations or tax planning that we haven't been able to help with. An area in tax planning that is unfortunately becoming a very regular for us, and I get at least 3 calls a day, is people leaving the UK. So planning in terms of becoming non-resident. And for some reason, a lot of people choose Dubai. So these are some of the other areas besides tax investigations that we look after. And if anyone has any questions, we will be happy to answer them.
Yep. So there you go, a brief summary of who we are. But if anyone has any questions, feel free to unmute, raise a hand, turn on your camera, and we can talk it through. say that seems like a no.
I mean, we've got the contact details here anyway, and
Yeah.
if anyone has any questions, you can use the contact details, or who you can also get in touch from our colleague who set up the webinar, and we'll be happy to answer them. Okay. I think that should be all. We'd like to thank everyone for joining, and this is we'll be doing this. The idea is to do it on a monthly basis. So hopefully we'll see you again in a month's time. Thank you, everyone.
Thank you.
Bye.